Yo, yo, yo. It's your boy Professor P. Just wanted to come back and do a little recap of the trades I took this week. I didn't take many, some because I was away from the charts a lot. Did have a good bit drawn up, but nothing really. I mean, I think everything played out the way I thought it would, but I just didn't take advantage of too much this week. Um, I'll go through and show the trades that I took, and then I'll go through and show some other possibilities of where, on these other charts we possibly could have got in, and things to be looking for the upcoming weeks, as far as how to get in, how to get out, those sort of things. So let me start off with the DXY. Um, on this one, really, really bullish. Um, Pretty much in the consolidated area for the most part. We know it's consolidation. We got a high, we got a low, no new high, come down, no new low. Slightly broke the high and closed above, but immediately react reacted back to the downside, and that's probably because of some level, over to the left hand side. But for this one, seeing this type of price action, price open up weekly or the weekly open starting on the 10th of earlier this week was here. We came up bullish, uh, had a slight retracement, then pushed higher. So if you trade the DXY, if you were consistently following it, then as you see this uptrend, back here, and you are able to identify the consolidation from the previous 2 weeks, then you say, okay, well, if it's push bullish, get some slight type of retracement, could potentially enter here, but your targets were not that far off for you to have a very good R&R, because necessarily this is a 4-8. So if you entered off this pullback here and you were targeting the highs, um, your setup probably looks something like this, but your stops would have had to be way down here, which is 44 pips, and then your target back into the highs, is only 26 pips. So not necessarily the best setup. So that wouldn't have been the best, proper execution to get in on, especially with, as price action reacted back to the downside the way it did. So going forward next week, you definitely want to wait until price action breaks out of this consolidation range we got going on here on the 4 hour. And then that way you'll be able to determine if this uptrend is going to continue, or if we're going to come back down and retest some of these lows back over in this area, or we're kind of close to this area. So, this potentially could be a target if price action closed below 93,670. UJ, extremely bullish. A lot of these charts I saw coming from Sunday night into Monday, I saw price action just pushing into the highs very, very, very strongly. And when I see that, I kind of just step away from those charts, at least until I see some type of retracement. And when I say retracement, I wouldn't necessarily call these the retracement simply because it's not big enough. I mean, this level here as a support is holding up, but if I'm looking for a retest to buy back into the highs, I want something that's going to, come down and show me it's going to come down and hold up a support and then retest the highs that way. This right here is, the pull back, push up type method here. This isn't enough. You couldn't necessarily took a buy from this level because this level was holding all week long. So if you was watching UJ, this one or this one would have necessarily been your buy signal. But for the most part, you stand a chance that the probability of winning this trade is not necessarily very high because of how much price action has already pushed in the past. The weekly open back over here on the 10th, straight bullish opening, some type of exhaustion here, pushed up, gave you a new high, then retraced to the level where we exhausted from, a double top, pretty much a sell signal, but you're in a bearish trend. So, you have to have some good experience to know, to possibly get in right there and potentially be taking all your profit down at this level, which is a 43 pip, range. So you definitely could have made some good money off of that, but it's overall risky because we're bullish back in this area and then potentially had those buys coming from this support. Looking left, there's probably a structure um, to show you where the target would have been. But overall, for me, the way I trade, the way I look at the market, is this whole setup on UJ would have been risky for me for this week. So I didn't execute anything on UJ this week. Over on GJ, I had 2 trades. I closed both of them early because same way as UJ, price opened up on the 10th, the weekly open here, and just straight went bullish. On UJ, I was a little bit, on GJ, I was a little bit more confident to take a trade than I would have been on UJ. But for the most part, once I saw price push up, give you a new high, come down, and then this was a 50% retracement trade. And once I saw it struggling to push up and it came back down to support, I was actively watching this in the market. And I saw her start to wick through this little white zone I got marked up here. And, mentally going through it while the charts are actively live moving, it looked like it was going to break that level. So I closed everything, once price started wicking through here, both of these trades, I closed both of them. And I'm glad I did because if I didn't, it would have hit full stops and then eventually went where I thought it was going to go. So I got my zones pretty much marked up pretty well. I think this big bearish candle here was a news event, came down and retested Monday's London lows, and then it's just been bullish and still bullish ever since. So continuation buys, if I would take a trade above this level as price closed above, here's my break that I would like to see. The thing with the continuation buys though, with this one, this is right at the New York session, which I don't trade, so I would have potentially skipped that one. But continuation buy theory says, as price close above that level strongly, we wait for a retest to come and close above that level at 154.515. So seeing this big bearish candle close back below that level, I wouldn't have seen the signal like I see over here to buy, for price to continue higher. Continuation bullish zone, breaking retest, same type of deal. So with this being a New York session, I would have missed that altogether. So wouldn't necessarily been worried about that. But coming over to the Asian session, which is the start of right here. Let me get a line on that thing. That would have been the start of your Asian session. Necessarily what I would have looked for is where was my New York low? Would have been the first question I would have asked myself coming into the Asian session. And going down to the smaller time frames, I would have saw that if this is my New York open, I would have marked this area here. I would have marked this area here as my NY low. This area over here would have been high. So the setup / strategy here would have been, see if the Asian session respects that New York low. And if it does, this would have been my Asian low. If it does, then we are going to act up as soon as we get push pullback structure, bullish structure to the top side. Based off of this low, retesting the highs would have been the initial, or would have been the overall target. And then if you left a runner running, then as you can see, what would have happened. So setup would have potentially looked something like, okay, so we got respecting this NY low, push, pull back here. We've been looking for an entry somewhere in there, stops below that NY low, and then the targets would have been here, which would have been met. Oh, yeah, so you'd have been that trade for a little minute. Here, it's over. This would have been in London. Yeah, it's been in London. So somewhere between the London sessions, we definitely would have took profit. And this right here would have been an area where you start to get nervous. You see price get here the first time and then start to go back bearish, pushed above again, potentially a double top, potentially a lower higher from this low. And then like, should I start taking profit here? But, if you have been in the market for a little while and you are good on to your trades, then you see price pull back a little bit more and eventually went through and smashed those targets. So my trades over here, I feel like they were still valid. We had a little news jump in. If I would have had potentially stops below the London low or potentially waited a little bit longer going into the London, I like to initially get into the Asian from the Asian session. So potentially I could have waited a little bit longer, but I didn't. So, a little bit of loss over here, not much. Could have had it set up from here. And then for the rest of the week, I just didn't really watch GJ because it was really, really bullish on the higher time frames. And I didn't really see a big enough retracement that I would have liked to see to get in. So price opened up over here on the 10th, and it's just bullish. Just bullish. I like to see a bigger, like you got this bullish run here, you got this retracement here to show me that price didn't break the low. It did create it did break the structure of the downtrend here on this bullish run. It came back, didn't break the low, and then push up. Right here, price action open on the 10th, right up in here, and it just took off. No retracement. I mean, you got these slowdowns, these exhaustion levels here, but for the most part, it's just straight bullish. So um, yeah, I just let this chart run, especially after I got clapped on the two trades there. On GU, I had a little bit more success on GU. I did have some losing trades on GU, stuff that I closed early that I should have let run because it eventually did hit take profit. But this week has been a busy week for me, doing outside stuff versus just strictly focused on trading. With this setup here, it was outside of my trading time, but I did see it working on the higher time frames. So I went down to the lower time frame and waited for the setup. So what I saw was price action. So it kind of makes sense. Our time frames were bullish, pushing up, breaking bear structure, looking left. So what I saw was you had the weekly high, the weekly low. We were not able to break the weekly low. I saw this push and this pullback, still not able to break the weekly low, and we started trending bullish. Then I saw another retest, and we still did not break that weekly low. So I said, okay, well, we got the weekly high way over here. We are unable to break that weekly low, and we have not retested that weekly high just yet. So let's look for buys. And on the weekend pre-market analysis, this 4-hour order block had not been touched as well. I did see on one of my liquidity feeds that order block had been tested, and I want to say it was probably this candle here. And if that was the case, because I have like 3 different platforms I trade off of, if this was the candle that I saw when I was looking at this before, one of these candles over here, no, it had to be this one. That's the closest one. But if this was the candle that touched it, then these are the orders that were resting at this order block level, and these orders didn't break any structures looking left. So that was like kind of my second and third confirmation to definitely stick and look for buys. So as price action came back down, retested that low, pushed up, retested the breakout from that weekly low on the 15 minutes where you can kind of see it best. I was watching this and I saw this doji create here. Then I saw this big bullish candle here. When I was watching the charts, they execute once price broke this high, but with spread and everything else, this is where it put me in. And then price just took off. The initial target was this 4-hour order block, but once price action got up here and started chopping around, I actually this was the initial setup, and then this is what I actually captured once price got up to that level and printed that doji. I was out of there, closed it all. Once I had the initial break and retest and then pushed up again, started slowly but surely keep stops up. I think final stops are right there. And that's pretty much what the trade looked like once it finally gone in my direction. When was this one? This was 2 nights ago. So I think this was Wednesday's trade. What was this Thursday? Yesterday. So what I saw here was in my mind, I was thinking we still haven't really broken that 4 hour order block. We really haven't really pushed into it hard enough the way I like. Price action is still bullish on all time frames. So I saw price pushing up during the Asian, came down, created this little support here, pushed up again. We broke that support and got back above that support. As soon as price that candle closed above the support level here, I was in. Target was still that 4 hour order block. And then I actually had 2 trades open right here, 2 positions open right here, and then it just took off. If I would have had a runner, it'd been a banger, but I was happy with these 20 something pips right here times 2 because I had 2 positions open. Potentially for next week, what's coming up, we have closed above this bullish continuation zone. There is an untested daily order block right over there. Looking left. Go back to the daily time frame, you see a lot better. Look at here. So this is what, if price doesn't today being Friday, if price doesn't make it to this level, if price doesn't make it to this level today, then I'll definitely be looking to see how price acts up and reacts to that level coming into next week. Looking at this price section, you got a high, you got a low, lower high, lower low. Pushing up, we just now had a break of the bearish structure that was going down that gave us a new low. So this level hasn't been retested yet from where price broke out and started giving us the bearish structure. So this is what I'll be looking for going into next week. Price pushing up into there. All out here. If we don't get an immediate, crash like we did before, like I want to say last week, pushing into an order block. I think it was on GJ as well. If we don't get an immediate crash once we touch this level, then I'll wait for it to set up something like this double top or even a triple top with a liquidity grab. Because I know GU likes to liquidity grab, like to throw a lot of fake outs. So I'd be real cautious with GU on the entries. But yeah, this is what I'll be looking for next week, and then to see if the orders that are left here are strong enough to push below this low and create new lows and then retrace and continue to bearish structure, or if it only comes back down to this level here. And I say this level here because when you have the high, the low, lower high, lower low, this level was your high and then your higher low that created the new high. So I'll look for price action to either stop here or go down to continue to give you new lows. AU, I think I got clapped on AU one time, small amount of pillars. I managed real well on my trades this week. I closed out early on this one. I wish I didn't. I had 2 positions open on this one as well. I think I did, maybe just one. But this one never hit the stops. I saw it coming down, this big ass bearish candle here. And it hit the 50%. I didn't know if that 50% was going to be strong enough to hold up this support here. This London low was down here. I didn't really consider it, especially once price closed below that NY low. I thought we was going to crash all the way back down from where price initially started this bullish run from. So price came down here. I saw this big candle, closed it out. When I woke up the next morning, came back to it. If I'll let it run, then there you go. Smashing TP. The risk to reward is right at a 1-to-1. It's a little bit less than a 1-to-1, but at the same time, had I let it run, had I had the targets all the way up at the NY high, then it's a 1 point or 1 to 1.2. So like I said, it was a difficult week for me just because I didn't have a lot of time to get on the charts. I didn't have a lot of time to mark up and see everything I wanted to see. Where I think AU is going. Let's see, DXY consolidating potentially come back down. UJ bullish as hell. So AU could potentially reach up in here to this supply zone and then crash back down. Currently, it's bullish, big bullish. So currently, you initially just want to look for the buys. Anything outside of that is a guessing game, and you want to look for the buys because price action is bullish. It's pushing up. It's creating higher highs and higher lows. So stick with what the market is giving you versus what you want it to do for you, and then just attack that way. AJ, definitely, I don't think I looked at this past Sunday. Potentially, you got the weekly open here, price pushed up, exhausted a little bit, gave you a new high, exhausted some more. So potentially you could have had to buy once price broke the new high or down here from this support. And this is on the 4 hour. So on the 1 hour, how you can look at it, price open, extremely bullish. Naturally, if I would have been watching this chart, what I would have been looking for is price to come back and respect this support here where it slowed down before, but it didn't reach. It looked like it just gave you somewhat of a 50% retracement of this little bullish move here. And then it gave you a new high, came back and respected this low for a retest, and then it just continued bullish. So had I been watching this probably would have been my entry signal over here. As price continued to respect this support right over here. CAD JPY, pretty much the same thing, bullish, bullish, bullish. Weekly open here, pushed up, exhausted, gave you a new high, and then just continued bullish structure from there on through. I don't know where this is going. I do know it is very bullish. It is creating, creating new highs all the way through. We have this point right up here, so I would wait to see if price breaks above. If it does, give it a little break, a little retest, and then attack into these to that level over there, or even to these highs over here. Completely bullish. So next week might be our retracement week. Next week might be all freaking sales. So if price does only want to give you shorting opportunities, take it back into some of these levels where exhausted to. Take that short all the way down, to these levels. Let price action prove you wrong and then get back into the buys, if it's giving you bear structure. Lower lows, lower highs, lower lows, lower highs. That's the setup and run with it. You can. Continuation sales. Would have been hard to take this trade here just because this candle isn't strong enough closing below, that level. But this is the 4 hour, so let's see what it looks like on the 1 hour. The open, like bullish, came down bearishly. I could potentially see getting clapped over there as it retraced all the way back over here, closing above structures. Then probably would have been looking for buys, and price came all the way back down and got clapped again. So this is just funky price action right here. No real big impulsive movements, just all choppy price action. So the best move on this one would have definitely been waiting for that strong break. And then once you saw price be able to close below this level and then maintain this now support turn into resistance, this would have probably been your bearish signal right in over here on this level. And this would have been during the aging. So that would have definitely been something I would have been looking to act up on. But like I said, didn't have a lot of chart time this week. Wasn't able to sit down and focus on the charts like I normally like to. So that's why this recap video is coming out on Friday instead of on Tuesday. And then dropping down to gold. When I looked at this over the weekend, I identified this as a consolidation / range. You can trade the range if you want to. You can get clapped if you want to. That's all up to you. But what I have, coming from Sunday, wait for the range to break. So if you extend this here, you could have potentially acted up. You see this big bullish candle up here above the range, could potentially have buys above there, but this would have been tough to take simply because you got all this range and price action looking left. You have price push up, unable to break the highs. You got this big ass bearish candle coming back down. It didn't really break any lows, but at the same time, on any other chart, them big bearish candles mean price probably about to go back to the downside. But this is gold. Gold reacts differently. Gold moves differently. And if you trade gold, then you know that. But if you don't, and you just coming into the game and you see this big bearish candle, you like, oh yeah, I remember people telling me, see the big impulse moves to one way, one side or the other, take it that way. But I think this was a news event. I'm pretty sure it was. Price came down, fake to the bottom, and then immediately cashed out. That's a lot. You can change a person's whole life if you got the right lot size, if you got in at the right opportunity from way down here. And you know, that right there is a life-changing move right there. And then people who've got the big enough accounts or people who have traded long enough or people who know when to get in, you know, you take this trade right here, you ain't got to trade for the rest of the month, you know, if you did it properly. So my continuation buy zone still played out. If you took the buy from this level once we broke and closed above, and then potentially once we broke this high, you still could have acted up for what is that? I know gold counts differently, so I don't really know how many pips that is. But yeah, still could have had. The other thing with this is if you bought once price broke above the high, what would your stops have been? You want to say 10 pip stop, 30 pip stop, 40 pip stop. Yeah, that would have been rough to kind of try to play out. So that's why I don't trade gold. I pretty much stay away from gold. Just look at it, watch everybody else do it, watch them have fun. But yeah, I ain't in the business of trying to catch any of this because gold be off the chain. And based off of how this look, you know, you push down, you broke it was a resistance because we couldn't push above before, came up, and I don't think it ever was a support because it didn't hold up any price level. So we broke right back into the range. So you extend, and then now price is respecting that area as a resistance. So if it wasn't Friday, and if I was feeling a little risky, if price was to break the low of this candle, being on the 1 hour chart, probably take the shorts back into first TP at this level, and then if there's a runner, let it run all the way back down. And yeah, that's all I got for this one. I will be doing a breakdown analysis again on Saturday. Link all these charts, mark them all back up. Hope this week I'll have a lot more time to get into the charts and drop more charts on my social medias, give more breakdown, give more analysis throughout the week, and just potentially act up in these markets. But what I really see on gold, low, lower high, lower low, lower high, lower low. We pushed up, broke the bear structure that was continuing the downtrend, and now we've got a retracement. So if price finds some type of support right up in here, we could act up all the way back into the highs. But today's Friday. I don't really trade gold, and I just ain't interested in trying to catch none of this. So that's all I got for this one. I'll catch y'all next time. Like and subscribe. Thank you for watching. Welcome to the U.